Hi everyone, Kathleen Brooks here, Research Director at XTB. Well, what a day it's been. Stocks are higher across the board. Asian stocks, Chinese stocks in particular, and Hang Seng, they've had their best day in 4 years. And this is all because of China's stimulus package. So they announced a stimulus package overnight, and it was much more than what most people expected. They have literally thrown the kitchen sink at the economy. So they're trying to boost the property sector. They're giving cuts to mortgage rates. They're giving cuts to interest rates. But crucially, they've also given $113 billion to encourage people to buy stocks, so fund managers and other ways in which to buy Chinese stocks, very much focused on the domestic economy there. And that has really had a big impact across European stock markets as well. US futures are also pointing to a higher open later. So what we've seen is that European companies with a high exposure to China, those stocks have done really, really well. And they are the outperformers today on Tuesday. So we've seen LVMH, Hermes, L'Oreal, BMW, these luxury goods companies and strong consumer brands, they are doing really, really well and they are leading the way. Now, the FTSE 100 is underperforming Europe. However, the miners and the materials companies, they are doing very, very well. That sector is up about 4%. And that's because all those industrial commodities, the iron ore, the copper, that's all getting a boost from this China stimulus as well. So overall, the China stimulus package is incredibly bullish for financial markets. And it comes in an important time. This is the last week of Q3. Typically, September is is seasonally a bad month for equities. So we've been talking about that over the last month. But actually, what we could see is if we continue to see this rally, stock markets buck that trend. So in the US, we've already got gains for September, but not yet for Europe, but we will be watching that closely. So September may not be as bad a month as it sometimes is. It also sets us up really nicely for Q4. Out of that, commodities, they are doing very well with Brent crude now back above $75 per barrel. We saw another record high from the S&P 500 yesterday. So that's still basking in the glow of the Fed rate cut last week. So Fed rate cut combined with China stimulus sets risk sentiment up very, very well for Q4 in our view. So a very positive start. We've got the dollar sinking as well. That tends to happen when we get positive risk sentiment. Good news for the euro. Good news for the pound as well. But overall, European equities are really looking strong on Tuesday. And we think that that's largely because of the China stimulus plan, not because of the ECB rate cut. So bigger expectations now for an ECB rate cut in October. But we think the China news is actually more important for global equities and for global risk sentiment. So thank you so much for joining. And I will hopefully see you all soon.